Thursday Night Stock Charts Live. Welcome. Quite a bit to go over. Today was kind of a potential game changer, and we're going to talk about it in quite a bit of detail. So I want to begin with a decoupling that's happening in the media, and it continues to gain steam. I'm going to talk about an article that came out today about James O'Keefe. A lot of shenanigans out there. So it's no great shock that he's been banned from YouTube. Not that I'm any James O'Keefe, but I've had several videos of mine demonetized now because I speak my mind. I will be talking about James O'Keefe tonight. I have no idea whether or not this video is going to get banned, and I really don't care. I don't do this for the money per se. I do it for the engagement. I do it for the enjoyment. I like being somewhat of an influencer on my small terms. However I can help out people, I do it, and good. It's fun. It's fun. It's fulfilling. But at times there are people out there that don't like straight talk. They want to get the spoon-fed narrative from the mainstream media. We don't do that here. We won't do that here. We will speak the charts. We will speak the truth, and that's just the way it's going to be. So if you're offended by straight talk, okay. I doubt there are very many out there that are upset by that, but I do sometimes get feedback. And sorry, we do not change our position. So the reason why I have this up in front of you right now is that just in case we do at some point in time part ways with YouTube, I have a way of contacting you. Join the 30-minute chart club. There's a link. Actually, no, there's no link below. I forgot to put it out there because I was in such a rush to get started tonight. I'm going to drop this in the inbox, and we'll probably do a 30-minute chart club tomorrow morning. I have to go in for a procedure, but I'll probably do it tomorrow morning, maybe about 7:30. And yeah, I think that's what we'll do. So join. We go over the 31 charts, actually maybe 32 now, charts that we like the liquidity in. We like to trade them. We could trade options. We could get in and out quickly on those options because they are liquid. We look at the 30-minute chart, see if we have setups going into the next trading day or that morning. And we talk about it. We add them to our list of our top 4. We upvote them. This is TrendSpider. And you can see that Meta we had up as a short. That worked. Moderna we had up as a short. That worked. Tesla we had up as a... I'm shorted it, so I want to be truthful. And we are underwater on it. I forget what we were talking about with Tesla being a continuation breakout or a potential short. I forget, but we're short of it. We went over this chart maybe 4 days ago, last Saturday, I think, and Netflix as a short, which we did short. We made money on. So that's what we do on the 30-minute chart club. If you're interested, link in the video description box. I need to remember for those watching this on the replay, use the link below in the video description area. I will put it in the video description area after the live stream. In fact, yeah, I'll do it after the live stream. Let's go to some people and say hello. Franklin, hey, brother. Sam, hello. Mr. Tim. And Rick, I got a notification. Usually don't get them these days. A trade notification or the live stream notification? Let me know. Okay. So last night on Market Wrap, we were talking about, I was reminded today by fellow member Jeff about an observation I had made on last night's Market Wrap. It goes out to members. We have a 14-day free trial offer. You want to give us a try. And I want to pay for you a snippet of why it's so important to use your indicators, not so much for overbought or oversold levels, but for bearish or bullish divergences that could be signaling strength or weakness that's not really reflected necessarily in the trend of the individual index stock, in this case, an index. So we were talking about this last night on Market Wrap. So give it a listen, make sure volume's up here. Dow Jones Industrial Average daily chart, a down session. We're still holding support. Not loving the stochastic action, hating the RSI. Remember, yesterday we broke out on RSI. Today we broke down. This is very, very weak price action. I mean, I went on to ignore this after I drew the resistance level because I wanted to keep an open mind and say, you know what, okay, granted the first run or two, we didn't make it up to 70 after the Stokes rolled over. Excuse me, before the Stokes rolled over. But now the Stokes have rolled over. RSI has now failed to hold a breakout point well below 70. I think that this is relative weakness. And the stochastics are rolling over. This thing needs to get going in a very, very quick hurry because if we break support, this is going to get real ugly real fast. This is the market sending signals. Volume was light today. Let's take a look. So let's fast forward to today's price action on the Dow Jones Industrial Average. As a matter of fact, let's use the same chart. We're going to go over the weekly charts in detail in a moment. But where's the Dow Jones? There we go. This is the same chart. And you can see that what we're doing here is we have a major, major breakdown on the Dow Jones Industrial Average. And it's not just the Dow Jones Industrial Average. It is the triple Qs. But let's stick with this chart here. These are your momentum indicators, RSI, stochastics. These are the two primary indicators that I use. They're secondary to price and volume, but secondarily, I watch them very, very closely. And the RSI has been putting in lower highs despite the fact that the markets or the Dow Jones Industrial Average rallied to its peak of over 21%. Think about it. We have been putting in lower highs, and now we are breaking down back below the neutral level at 50, and the stochastics, which you would hope would be negating RSI or vice versa, no, they're confirming relative weakness because now we have lower highs, a failure to hold 80 and move up higher. And you may be saying, wait a minute, a read on stochastics above 80 is a sign to short. No, it is not. It's not overbought. It's a sign of strength. If you short a stop because RSI or stochastics goes above 80, you're going to go broke. Believe me. What you want to see is a stock move above 80, vacillate a little bit. Hell, we didn't spend 2 weeks above 80, not even a week above 80. And now we did a V-shaped recovery off the lows, and now we're putting in lower highs. This is a bad chart. This is very, very bad. So we're going to come back to these charts in a moment. But first, I want to go over some news that's out there that is very disturbing. We need to appreciate the environment in which we find ourselves trading. And we need to understand that right now, and I've been saying this since the beginning of the year, actually the mid to late December, I've been saying expect a rally in equities. As of last weekend, I came out members first. Then on Sunday night, I said to the public, get ready. We're probably going to roll over here fairly soon. I don't know whether it's going to be the big correction, the big one, the big blow off top in the VIX, Or is it simply just going to be a correction in the equities? For all I know, that's the way it's going to be. Let's talk about the environment that we find ourselves in, because we are in an environment where we are on quicksand, and it only gets worse day by day. And with economic data this week, not much happening. We did have the Fed chair that came out the other day, quote unquote, dovish. I didn't find that, and I was quite confused about the rally in the market. Frankly, I didn't do anything. I didn't respond to it, because normally after these Fed events, 2 days later, you find yourself back to where you were right before the Fed event. So where are we now? Right back to where we were before the Fed event. So it's good that we didn't do anything. What we did today, though, was we added to shorts. So we'll walk through this. We'll go over the weekly charts in a moment. Let's first talk about the Schiller PE ratio. We are less expensive than what we are on Sunday night, but still very, very expensive. Earnings, real earnings growth dropping like a rock. Fed's balance sheet this past week rose slightly, a little bit of a hockey stick action. I lost this. And I want to talk about this really corrupt environment that we find ourselves in. And, it's bad that, sorry, folks. This is not the one I wanted. Hold on. What did I do? I lose two of them? Here we go. So you think it's bad that you have the Federal Reserve, not the Federal Reserve, the FBI now monitoring parents that complain at school boards. They don't want to investigate Hunter Biden. They have now investigated Biden's home for documents, but they did raid President Trump's home. And now you have the FBI, which is now targeting, they've retracted, whatever that means, retracted a white supremacist memo. Now, what they're doing is that anybody that decides that they don't want to send their kids to public schools anymore because they're corrupt, they're indoctrination camps for communism, let's call it what it is. They've decided to investigate these people for potential white supremacy. This is scary stuff. This is what Weimar Germany. This is Nazi stuff that we saw during the times of Hitler's rise. And this is the secret police. This is the Stasi. And it continues to get worse. And tonight, and this I find very, very concerning, Project Veritas, one of the very, very few investigative journalist outfits in the country, James O'Keefe is now on paid leave from the organization, only days following arguably the most bombshell interview or expose that they did on Pfizer and how they're doing gain of function research, according to their report, according to their employee, their vice president or director, whatever he is. So things are getting ugly really, really fast in this country. And the leadership here is obviously corrupt to the core. And for the most part, it's on both the Democrat and Republican sides. And then you take a look at what's going on over in the Ukraine. We're not even going to touch upon that. And then you take a look at what's going on in the banking sector. Credit Suisse today, last I looked, it was down 15%. Let's see how it closed on the session. 15.64%. Folks, this is a money center bank. This is one of the biggies. Deutsche Bank, Credit Suisse, pure junk companies, but they are, if they ever went down, you want to talk about a Lehman moment, it would be absolutely catastrophic. They must be bailed out. So Credit Suisse craters after staggering bank run and warning of continued losses. They are probably going to have to nationalize Credit Suisse in the very, very near term if this bank run continues. And this is why they want the digital dollar, the digital euro, the digital franc. So that way they can lock up all that money. No more bank runs. There's no more cash to get. So keep an eye on the news coming out of the banking sector. So we had Fed Chair Powell come out the other day, and this is the second report. We saw the 2-year Treasury bond auction, and now today we had the 30-year bond auction. Not good. Not good at all. And in a moment, I'm going to go to a chart of the 10-year Treasury bond yield and the 20-year Treasury bond price. And you want to talk about a tale of two different charts. Last night, there was a tug of war, as I mentioned on Market Wrap, with members between the two. One may break out, one may break down. It happened today. I mean, it was clear and decisive who won. And we'll go to that in a moment. Stick around. So we have the yield curve. The yield curve is at lows not seen since early 1980, 81. So for those not familiar, this has signaled every recession since 1955. And there's something very, very wrong in the bond market or in the economy. Very, very wrong for this chart to look like this. And once this gets going in the wrong direction, meaning it gets going to the upside, things are going to get real quick. Overlaid here in gray, you have the S&P 500. You can see the S&P 500 is in a downtrend along with the yield curve. The problem for the S&P 500 is this. We are at the upper band of resistance on a monthly time frame. So it's either poop or get off the pot at this point in time. Either we break out or we break down on the S&P 500. Now, add to this fact that we are at monthly resistance, weekly resistance, and in fact, breaking down now on a daily time frame. You have stocks like Tesla, of which we are short. Tesla up 5% today. I don't know if they finished up 5%, but they were up much more than that on the day before selling off. They still closed up above 200, and they're up over 100% on the year so far. Think about it. And you have a lot of other junk stocks out there that have really gotten pumped out. ARK Fund's been pumped up. So be careful of this market. There's a lot of new newbie money floating into the market, amateur money floating into the market. You're not seeing a lot of institutional demand. So let's take a quick look at the weekly charts of the major averages. And I want to draw your attention primarily to this one here. This is the 10-year yield. Now, what I always like to say when we go over a weekly chart on a Thursday night is one trading day left to go. A lot can happen here. But as it stands right now, we are right up and into resistance on a weekly time frame. If this thing breaks out and we begin to see new higher highs in the next few weeks above 3.95, and then God forbid we take out 4.33, we're going a lot lower on technology stocks to down, because technology stocks, many of them, I'm not talking about Google, I'm not talking about Apple, I'm not talking about Facebook. I'm talking about your ARK Fund names, those names that they couldn't make money with interest rates at zero. Now they need to refinance their debt at higher yields. They're zombie companies. There was zombie companies with rates at zero. They're dead on arrival now when they go to refinance those loans at higher yields. So I think that what you're going to see are a lot of bankruptcies in 2023. These rate hikes are going to come home. The chickens are coming home to roost. And the names in the chip queues, they're probably going to be able to withstand higher yields relative to where they were at their peak at 4.33 on the 10-year yield. Why? Cost cuts, massive cost cuts. So they'll be able to withstand higher yields. Small companies, good luck with that. They're going to have to cut to the bone. So let's go on here and let's take a look at what happened today on the 10-year yield. because it really does matter. Daily chart. Initially, they tried to take the 10-year down when in fact, they reversed it to close it with a bullish engulfing bar. If you're watching this on the replay, I don't have it up in front of me right now. I have a 5-part video tutorial. Link below. Hopefully you're not looking right now because I don't have the links populated. I was so late tonight with getting ready for the show. Let me get it out there. It's driving me crazy. I don't have my links up. And if you folks could please hit this like, subscribe button if you like it. If you don't like it, hit the dislike button. I think YouTube likes it and you do anything. Here we go. All right. I'll pop this into the chat box. And for those wondering what the heck a bullish key reversal bar is or a bullish engulfing, watch these videos. They're free and they will be sent out to you. And this goes in. All right, for those folks that are watching on the live stream, the links that I'm referencing here, because I'll forget later on if I don't do it right now, are now linked below. Yes. Okay. Sorry. How to get that done. Okay. So 10-year yield reversal bar. This is not good for equities. It's not good at all. And it's probably the reason why you saw stocks sell off today, besides they were technically weak anyway. TLT broke support today. Look at this, so weak it couldn't even hold above 50. This is a weekly chart, I should say, not a daily chart. Light volume. Let's go to the daily chart. The bond market matters quite a bit here, folks. Look at this. Breakout point failure. We broke out yesterday. We gave it up again today. We did this back here as well on the 1st, gave it up on the 7th. This is relative weakness on the 20-year bond ETF. And you take a look, you want to talk about bearish divergences. This is the market sending you a signal, right? Rather than validating this move up higher, it's going lower. It should be moving up higher. It did not. Relative weakness on the TLT. Tips, Treasury inflation protected securities. Okay, so on, I think it was Monday. If one of our members is on, let me know if it was Monday or Tuesday. I think it was Monday that we lightened up for the first time in a very, very long time on silver and our gold mining plays. And we still own them, but we lightened up quite a bit because I predicted that we would see a breakdown. Why? It's because of this, a breakout in the US dollar on a weekly time frame. Now, why does that impact gold and the tips? Well, the perception is that rising US dollar, the Federal Reserve has got the back of inflation, when in reality they don't. And the tip market is rolling over in anticipation that the Federal Reserve is doing its job and they're going to combat inflation. There's a couple of problems with that. We'll go to that in a moment. But for the silver and gold markets, the dollar, which was down today, reversed off of its lows of the session to close fairly strong. Gold mining stocks did not like that. Gold didn't like it. Silver didn't like it. And I don't blame them. What happened in the volatility markets this week? This week so far, what we have is a bullish key reversal bar on Franklin, Bob, you lightened up. Thank you, sir. Tuesday. Thank you for the record. For the record, we lightened up on the gold mining stocks and silver on Tuesday. Thank you, Franklin. I appreciate that. We always want to be accurate. Okay, so on the week, we have the volatility index, which is flashing a bullish key reversal bar. And for reference, folks, we don't look here at the contrarian trader, at the market from a daily view or even a weekly view. We want to look at that holistic view, the macro view of the market that we're trading, right? So let's take a look at not a monthly view of the VIX. Let's take a look at a quarterly view of the VIX. And where are we at? Wrong chart. Don't look at this chart. This is the chart. Okay, so the VIX, while down on the quarter, we still have quite a bit of time left in the quarter. Down on the quarter in terms of price, but I want you to pay attention to this. Cup handle formation on stochastics. And we are getting ready for the mother of all breakouts on the VIX. It may not be this quarter. It may not be next quarter. Hell, it may not even be this year. But buckle up. This is a monster getting ready to break out. And you could probably bet your bottom dollar, because I will be. When that yield curve begins to steepen, begins to move up, which at current it continues to make lower lows, an inversion, a nasty inversion of the yield curve, folks, when that gets going in the wrong direction, that means the Fed has pivoted. When the Fed is pivoting, they are reacting to something bad in the economy. When the Fed pivots, stocks just don't go up, they go down. And then eventually they provide enough liquidity and stocks go back up. The first go around is bearish for equities. Always remember that. Go back in time whenever the Federal Reserve is pivoted. Stocks go down. So the VIX, I'll tell you, we were adding to shorts as of last week. We add a little bit more today. Not aggressively. I guess I will be aggressively. I'm going to be an aggressive short, whether I like it or not, of Tesla. But I'm okay with that, because I think Tesla's going down, at least to make a profit, not crashing. I think that we're at the precipice of a pretty nasty correction in the market. Do we break the October lows? I don't know. I'm not that smart. But I think that that's where we're going in the short term, daily view. Because when you take a look at a daily chart, wrong chart, Bob. Daily chart, we broke out yesterday. Actually, not yesterday. We broke out, I mentioned this last night on Market Wrap. We broke out above the secondary downtrend line on the volatility index. Remember, the volatility index trades inversely of stocks, or inversely of, more specifically, the S&P 500. So whenever you see the markets going up, yet you have the volatility index putting in higher lows and breaking out on RSI, there's something wrong with the picture. This is a divergence. So these are the signals that the market sends you that you want to pay attention to very, very carefully and trade accordingly in advance of the move. So what happened today? We had a reversal bar yesterday on the VIX, and today a continuation breakout out of this multi-week downtrend channel. The VIX is breaking out, or I should say it has broken out. That is my puppy upstairs. If you're hearing a dog in the background, he likes to bark. All right, the Dow transports. It's one trading day left to go here, but we have a weekly breakdown on the Dow transports. Let's take a look at the daily view. The Dow transports are a canary in the coal mine for the equity market. Wow. A lot of damage here on the transports today. I mean, we didn't break just one support level. We broke two. Strange, though. Very light volume. Very, very light volume. but we were setting up for a nice continuation breakout. That is over, at least in the short term. The Dow Jones Industrial Average, we spoke about this. Uh, Relative weakness, RSI, Stokes, bearish divergences. The market sent us signals, and we listened. JW, hey, brother. Yoga Mac. The fields of AI will get ruthless pretty soon. The competitive game is just begun. Yeah, you know what? I was AI right now reminds me. I'm glad you brought this up. AI reminds me of other new infancy sectors like 3D printing. What else? Bitcoin, crypto. You know, they have these big expansions. .com, and then all of a sudden they go bust, and then out of the ashes rise the phoenix. So it's going to be interesting to see the winners here in the coming years. But yeah, there's going to be a bloodbath soon. All right, so the Dow we did. S&P 500, bearish reversal week. We have given up support. One trading day left to go. For all I know, we rally back to all-time highs tomorrow. Improbable? Yes. Unlike the Dow Jones, the S&P has had a respectable move up high. But take note, RSI could never get above 70 on the S&P 500. And now we have broken down. I'll show you what I mean by a breakdown here. Always know your price channels. Pop. And there you go. So where's the next stop for us? I'm thinking 400 or 4,000. If that fails, we're going down to 395. And after that, if that breaks, buckle up. Trip Qs, of which we are now short. We shorted the Qs several days ago. We're profitable on the short as of yesterday. And we added more, not to the Q puts. We initially bought the puts. Today we bought SQQQ. Small position. We bought it near the close. They ran up pretty heavily today. I like to see them consolidate and break out. And if we do get that breakout, then we'll add more to SQQQ. Jim Cramer did call it a bull market this week. he said we were in the new bull market this week. Good old Jim. At least he's consistent. Trip Qs, bearish reversal week. Big breakdown today. And this is why we shorted more today. We got the confirmation. We began shorting back here using puts. The bet was that this is unsustainable. And now we have broken down. This is a confirmation breakdown. And now we're looking to, well, we are adding more to the short side. And I got to be honest with you, I'm very surprised to see volume so light today. It didn't have the feel of a light volume day to me. The banks. The banks are now down in the week. I'm surprised that they are not more beaten up, given Credit Suisse. And it's not just Credit Suisse. You know, when the banks began rolling over back in 2007, 2008, the main question that was being asked was this: who has counterparty risk? Meaning Bear Stearns, Lehman. Okay, who has exposure to these banks? Who has counterparty risk? So people need to be asking themselves that question: who has counterparty risk to Credit Suisse? And at some point in time, banks are going to stop wanting to lend to each other because they don't know who has counterparty risk to a Credit Suisse or another bank that may go under. Therefore, the Federal Reserve needs to step in for all the wrong reason, provide liquidity, and pivot. That's not good for stocks. That's telling the market, hey, there's something very, very wrong. The Fed spooked, and we need to do something really, really quick. You know what? I did not, Franklin. I'm glad you brought that up. We talked about that on Market Wrap last night, and I meant to look at it today, and I did not. So we'll look at it tonight. Good. Thank you for reminding me about that. We'll talk without, for all I know, it was up today. I have no idea. But I was looking at NVIDIA as a short last night. But we'll take a look at it on chart request. TLT Texan Trader, we already went over. Not good price action. If you want to check on the replay, I went over it about 5 minutes ago. If you have more of a question about my commentary, you want some clarification, let me know. I'll be more than happy to answer for you. Let's go to the daily chart of the banks because I'm very interested. Yeah. Rounding top, big volume here. Unlike the rest of the market, beware the banks, folks. I'm going to do a ratio. Look at this. Wow. This is a ratio view of Credit Suisse versus the banking sector. So it shows you, is Credit Suisse stronger than the rest of the banking sector or weaker than the rest of the banking sector? This is just today alone on a relative basis. Absolutely annihilated relative to the XLF, down 14.69% relative to the banking sector. That is a major, major variance. Let's take a look at it from a monthly view. Get that macro view. Wow. Look at the RSI here. RSI is at 14.84. Houston, we have a problem out there in the banking sector. Look at this bearish reversal bar. Folks, one trading day left to go. But man, this looks like a nightmare in the waiting. Let's bring up Credit Suisse, no ratio view. This is a monthly chart. I think I said weekly. Wow. Let's put this into perspective. So to identify where the next bottom may be after we have now tapped the upper band of resistance, we're getting ready to break to new lower lows. It's so far down, you can't even see it on this chart. It'll be at a 2 handle easy. Where do we close? Oh, easily. We could even be at a 1 handle on Credit Suisse. That would be bankruptcy. They would have to be nationalized. There's a major problem out there, folks. Technology. Down week, not a horrible week, though. Daily view. Ugh. Didn't break support. Volume was light. Semis. Slightly down on the week. Light volume. Daily view. They were actually up on the day today. I wouldn't be a buyer here. You're seeing a breakdown on momentum indicators. RSI is broken down. Stokes have broken support. Lower highs, now lower lows. I think that this good volume today. I think that this gets resolved to the downside. This volume is actually rather concerning, and I'll tell you why in a moment. So the reason why I'm concerned about the volume is the quality of the volume, right? So Were we to have closed at the highs of the day or near the highs of the day on high volume, I would say this is a really good day. But being a contrarian, we take a look at the quality of the up day. All up days are not made equal, just as all down days are not made equal. In this case here, yeah, it's great that we bucked the trend. We bucked the downtrend on the Qs, on technology. They were all down. Semis were up. But what this is telling me is that you had a lot of sellers intraday churning out of the semis. Let's take a quick look at a 30-minute chart first, see if that tells us a story. Could be the close. Yep, it's exactly what it was. The close was not wonderful. I shouldn't say that. I shouldn't say that. I'm going to retract. They faded the gap. The close was not bad. The final 30 minutes was not bad, but they rallied it. They faded the gap all day long, and it would have closed negative if buy order didn't come in. Let's do a deeper dive. Let's go to a 5-minute view here. Yeah, and you can see at the close, another buy order came in. A lot of volume into the close, both to the upside and the downside. So beware of the semis, even though they closed up. Warning flag on the track. Consumer staples, they're rolling over, breaking down monthly time frame. Not much to talk about here. Bearish reversal bar. Discretionary names, not horrible. I wanted to get short. I entertained getting short today, but I took a look at the weekly chart to see where we were relative to support. We're too close. I can't short into a support level. So I'm hoping that they bid these up yet again, and that what we're seeing here is only a minor correction in the market, and that'll allow for more upside on the consumer discretionary names, which is what I'm looking to short. But I want to short up here where the highs of last week were. It would have been a great spot, but the market was too strong at that point in time to short. Let's go to a daily view. Yeah, we're probably going to break here. So be careful, folks. Energy. It's up on the week. This is horrible. I mean, this is on a weekly time frame. This is consistent with what we saw on a daily time frame of the Dow Jones. If you missed it, go back to on the replay. Check it out. What I said about the replay on the Dow Jones, my commentary there. Take a look at the energy sector and this double top down below 70. When you get that, along with a rollover, double top, and a breakdown to new lower lows on your stochastics, that's crap momentum. The correlation between oil and energy is breaking down. Because oil, let's go to the daily chart first here on energy. Yeah, it broke down again today. Because oil is actually up on the week. Usually there's a correlation, a positive correlation between oil and energy stocks, and that's beginning to break down. So oil looking good here on the week. We're back above support. One trading day left to go. We don't know if it's going to close there. The trend on Stokes is still very, very weak. I would not be a buyer here. I don't like when Stokes are in a downtrend, trading down below 50. Rallies tend to fade. So be careful. Daily view. I don't see a reason to buy this right now. Nice short covering rally. I'm not ready to buy this. We haven't put in new higher highs yet. I would avoid. Gasoline up on the week. So the Federal Reserve is going to pivot on its own with oil prices and gasoline prices moving back up? I don't think so. Gold. All right, so as I mentioned, we own physical gold. I didn't sell any physical gold. I'm going to hold on to my physical gold. We sold gold stocks because we anticipated negative price action, and we're getting negative price action, at least on the day. We're still up on the week, just barely on gold. I think we press lower here because, again, the dollar is moving up, and so are yields. Now, the gold stocks that we divested of were by and large the GDXJ, and that is down. This is only on Tuesday, so we avoided a lot of the bloodbath here, but not all of it. Down 2.3%. Let's go to a daily view. Now, we were watching this last night on Market Wrap, and I said, this looks to me to be a bear flag setup and that we're probably going to break. And today we broke. So the path of least resistance, at least in the short term, is now turning bearish for the gold stocks. So this is not a time to buy the dip. Let this all play out. And then you'll find opportunities to go stepping back in the water. Ideally, it's when the dollar begins to weaken yet again. But if we get a breakdown in the overall market, guess where money's going to go find a home? You guessed it, in the US dollar. At some point in time, the dollar will run its course, and then gold is going to catch a bid along with the mining stocks. But if stocks go down, gold mining stocks are going to go down along with the rest of the market. Why? People are going to sell what they can sell to meet margin calls. It's just the way it works. I don't make it up. It was like that when I got here. So beware. It's during that massive sell-off, all of a sudden you see gold catches a bid, and then the mining stocks come up after while stocks continue to crater. We'll be there. Why? We have liquidity. And you want to have that L word, liquidity. If you're not looking at this sell-off right now as an opportunity, you're too heavily invested. NUGT, another one we're long of, and that's breaking down. Silver. Rough week, very rough week. That's breaking down. We sold some of our silver. I think that's good. Let's talk about Tesla a moment. We're short of it. Why are we short of it? We have a lot of overhead supply. I went over this in great detail last night on Market Wrap with members that we're very extended. We have, unlike back here, where we were able to trade on top of the Keltner channels. We did so for quite a while. In fact, we did it for $15 days. The difference between now and then with Tesla is that back here, when they were doing this exhaustion run on Tesla, there was no overhead supply. There were no buyers above looking to get made whole. That's different this time. This time around, we've been above these Keltner bands since here. 31% gain. Ten periods. I think that while maybe you're going to see a little bit more upside to Tesla, I think you're going to get a lot of backing and filling, and then you're going to get a nasty-ass correction on Tesla. So if you're thinking about buying Tesla here because it sold off the highs of the day, don't do it. Don't do it. Take a look at a 4-hour chart. We have broken down below the lower band of support to keep gapping it up on headlines. Don't let them take parking space up in your head. This is going to correct, and it's going to correct very, very hard. 2-hour view. This thing broke down on the 7th, and they kept gapping it up. So once we begin, if we give up $200 a share, we're going down. Let's do some chart requests, and we are going to call it a night. Okay. This is going to be brought to you by our friends over at TrendSpider. 35% discount code below. Take advantage of it, folks. If you're not using TrendSpider and their automated technical analysis, I'm telling you right now, a lot of your competition out there, they're subscribing. So if you want automated trend lines with artificial intelligence, sign up. Get involved now, because It's going to be the norm to have this, not the luxury of having it. So let's do Nvidia first. Yeah. So Nvidia, couple of ways of looking at this. I'm going to go with the daily chart first because I spoke about this last night on Market Wrap, where we rallied up and into resistance. And you could see that we're in an ascending wedge formation on NVIDIA. Now, you're going to hear a lot about NVIDIA. NVIDIA is the backbone for artificial intelligence with their chips and yada, 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 yada. That's the noise. We don't pay attention to the hype. We pay attention to the technical analysis. What are the charts telling us? It's telling us that we have a lot of resistance. In fact, we have failed at this resistance level at 225.39 twice in the past couple of days. If we do, in fact, break out, we have one resistance immediately above. This is an ascending wedge formation. After that, right at 236, more resistance on a daily time frame. Let's overlay weekly resistance on top. Do we have any? Doesn't appear so. Monthly, no. Let's check out the weekly chart. This is my drawing here, so you can calculate this as being weekly resistance. 220. If we get up to 238, where do we close today? 223. If they limp it up there, I'd be shorting it all day long. Or if they break it down below this support level here and they close it there, I'd be short of NVIDIA. Great company. I have nothing against them. Strong RSI, Stokes along in the tooth. I like it to the short side. Too late for a long here. Thank you very much, Tim. Appreciate that. Thank you for being here. Paul, yes, please smash the like button. I'd appreciate that. I think all the meme stock buyers are going to need to sell their Bitcoin to cover margin calls. Biddy was on fire today. Oh, that's the short ETF, right? Biddy. Yeah, we spoke about this the other day, right? Yeah, we've broken out on RSI, broken out on price. Interesting. Yep, we got a breakout. Now it looks interesting. You're welcome, Franklin. Have a great night, pal. All right, Jeff. Rec and FAZ. Ooh, FAZ, reading my mind. Uh, I like it. I like the monthly chart. What we're seeing here is a bull flag setup. Or you want to call it a descending wedge. I don't care. Call it cupcakes. It's a good setup. And what we're seeing off of this low are higher lows. Now, the thing to keep in mind, and this is the value of the automated trend lines, is that when you're determining how much money you want to put into the investment, keep in mind a couple of things. One, You want a leg in here. The reason I say that is because I'm going to take the automated trend lines off. I'm going to put them back on. Oh, look at this. They have quarterly charts now and yearly. Oh, I'm like a kid in a candy store. This is new. All right, back to this. I'll play with this later on. So I would stay small here. I would open up a position here. Keep in mind it's a monthly chart. We're not even halfway through the month yet. So keep that in mind. Then once we begin to break out above, let's call it 1937, nibble more. Then as we break out above 20 bucks a share, add more. I would be more aggressive there because after that, you rally up to 22 bucks a share and you can look to book profits or do whatever. But it's firming up nicely here, monthly time frame. Long consolidation. Broke out today. I'd be a buyer if you want to find a good price point to open at, small position, around that 1850 mark is really sexy. And then add on increments. RSI breaking out, Stokes hooking up, bullish. Another short ETF. This is the short ETF of the banks, FAZ. They had a really, really good day today. But let's not skip over weekly view first. What happened? Let's try that again. Why am I not getting a weekly chart here? Ah, there we go. I didn't have it on logarithmatic. I can never say that word. This is looking interesting. We're back above the VWAP in blue. Now we're looking for divergences, bullish divergences. Here's one. Higher lows on RSI, despite the fact that price has been putting in lower lows. This is the market sending you signals. We have a breakout on a weekly time frame on FAZ. This is interesting to me. Stokes are beginning to hook up. Price looking strong. I would look to see how we close out the day tomorrow. If we close bullish and at the highs of the week, I'd be long of FAZ. BT. Bit Digital. It's beginning to widen out. Looks like he's setting up for a Bollinger Band squeeze here. See how tight these Bollinger Bands are? And they're beginning to widen out. Now, we were putting in higher lows, but we failed. We're going to need to retest. We're probably going to need to retest $1.09 per share. Where do we close? $1.20. I would not be a buyer here. Broke support. You want to nibble at 109 thereabouts? Okay. But I don't like the weekly breakdown here. Daily view. Yeah, we were in an uptrend. Ascending wedge. And this is what happens. You're in an ascending wedge. Basically, what an ascending wedge is, you have a wide trading range back here, but then it becomes tighter and tighter and tighter and tighter, and then it breaks. So if you're looking for support level, I would go lower. I'll go with the $1.09, and if that breaks, 94 cents per share. I don't know. I know somebody came out with a price target of 110 bucks a share, but then somebody else came out with a price target of 225 the other day. It looks as though it's going lower. All right, I'll put it to you that way. We have a short position on Meta, and I think that, and we did short the puts on Meta. We booked profits. I think that we could pull if the market sells off. It really depends upon the market. If the market does sell off, and I'm not talking about the big blow off on the market, I'm talking about a standard correction here. We could fill this gap at around 153. Let's take a look at a monthly view. Yeah, see, this is the value, folks, of the automated trend lines. If you want to know where resistance is, click the button. We're going to be lucky to close above these resistance levels by the end of the month. If, in fact, we close above 180 per share by the end of the month, that probably means we're going to consolidate and then move up higher. But right now, I see continued selling if the market continues to sell off here. So let's take our crayon out. There is your, I wouldn't call it a downtrend channel, but there's your trading range at current. We're probably coming down to 172.44. We have naked puts that expire tomorrow at the 190 strike. Hopefully, they expire worthless. We sold the contracts. We didn't buy them. We'll leave off with Geo. Sorry, folks. Geo. Nice looking chart. What was the question on this one? Burry like Geo a lot. Oh, Michael Burry. Is this the prison company? It probably is. It's a REIT. Looks good for a move to 16. I think 16 is an arbitrary number. I think you're looking at it a little bit too far here. I see more upside here. But first, you could retest next week, $11.86. I think that's a buy point, and then we rally up to 13 bucks a share. If we break out above that level and close their weekly time frame, then you're talking about 16 bucks a share. I would worry about getting through 13 first. And that's it, folks. Thank you for being here. Smash the like button, subscribe. Have an awesome trading day tomorrow. Let it be profitable and have a great weekend. And don't forget, the 30-minute chart club, link below. We'll get together tomorrow morning. We'll go over some charts, set up for the trading day. I'll see you there. Be well. And you can't comment. It's a private session, so you need to be on an email list so you can catch the replay later on. But if you want to join in, comment, and have a conversation and vote on what stocks we like the best, you got to be there. Enter your email address. We hate spam too. Good night, folks. Be well.